Well, diamonds are one of the world's most natural resources. An estimated $13 billion worth of rough diamonds are produced per year, of which approximately $8.5 billion are from Africa. According to Mining Weekly, the South African diamond industry faces serious challenges upstream and downstream. And joining us now is Ernie Blom. He's president of the World Federation of Diamond Bourses, and Paul Miller, investment banker at Resources Nedbank Capital, and that to discuss South Africa's diamond trade industry and put it in the context of the Southern African diamond industry at large. Gentlemen, thanks so much for joining us this morning. Let's perhaps start off with you, Paul, and get a sense of the state of the industry right now, because as I highlighted there, we had Mining Weekly come through with an article highlighting that there are challenges both in the upstream and downstream side of things.
Yes, well, the vast majority of South Africa's diamonds are produced by major diamond mining companies and kimberlite mines. We see De Beers operating 3 mines in South Africa. It's sold a number of its operations to a smaller player called Petra Diamonds, which has been very successful in applying a new operating model to those mines. So the story, it's not a bad news story. We have long life quality assets in South Africa. What we are facing in that industry, though, is tremendous cost pressures. And a lot of the costs are administrative costs being driven by government initiatives. We're seeing obviously increased power costs. We see increase the revenue royalty that came in 2008. We've got an export levy on diamonds. We also seeing, like all mining in South Africa, we've seen a long-term above inflation increase in wages. So there are cost pressures in the industry, but there are long life quality assets. And I think South Africa will have a diamond mining industry for many years to come.
Many years to come. For now, in this moment in time, are we looking at the industry being in a state of crisis, or is that too harsh rhetoric to be using right now?
Well, diamond prices have been tremendously volatile. So it's the big companies that have been able to survive through the peaks and the troughs. So there's no question, I think Ernst will be better qualified to comment on that. So it has been a rough ride, and we've seen, for example, mines being put on care and maintenance and then being brought back into production. What's very important, though, for us to understand is that behind that mining industry is a huge industrial complex in South Africa that supplies those mines with capital goods, with consumables, with engineering services. That's a big industry, and we employ an enormous number of people in that, and we're seeing that industry benefiting by pursuing mining projects elsewhere in Africa. So we mustn't think that industrialization is only driven by beneficiation. We have a huge mining services industry in South Africa, and it's a real competitive strength of South Africa.
That a quarter seeing some of the benefit derived. How are we looking on the beneficiation side of things, though? Because we know that it's been a very big focal point for the government. Whether or not we're making any headway is the big question, though.
I think in terms of South Africa, we are also facing a crisis as far as beneficiation is concerned. At the peak of our employment levels, we had about 4,500 diamond polishers. Currently, we are around about 600. So we've lost a huge amount. If you take Botswana, on the other hand, just north of our borders, they've grown from about 300 to well over 3,500. So what we need to do is to re-look at ourselves as an industry downstream, look at the sustainability of it, and create an environment where we can build up a well-trained, sustainable workforce.
Wasn't that part of the objective in the setup of the State Diamond Trader, though? I mean, what's going wrong there? Where are the challenges?
I think, let me say at the outset that the idea behind the State Diamond Trader is an excellent idea, and I fully support it. However, and as I said in an article last week, unfortunately, the legislation empowering the State Diamond Trader is not conducive to building up a sustainable downstream industry, because a State Diamond Trader has to buy what they call run-of-mine production. A beneficiator, a diamond polisher, cannot polish the industrials and the near gems. It needs to polish the gemstones. But it's forced to buy, in terms of the legislation, the full run-of-mine, and therein it lies a problem, because they can polish a certain proportion of it, and then the rest remains in stock, and they have a big trouble in getting permits to actually sell what they can't buy.
What's your assessment, Paul, of the State Diamond Trader right now, and the kind of role it's playing, the kind of interaction that we're seeing between it and other players in the industry, your miners specifically?
Well, I think we must take a step back and realize the balancing act that the policymaker has to has to strike in this situation. We've already seen, we've got an export levy on diamonds, we've got a revenue royalty on diamond mines. The state is intervening in numerous ways in that industry. The administrative prices are driving up costs. Then we've got a state diamond trader that is supposed to encourage new entrants. The question is, if you're going to subsidize new entrants, let's call it that, call it a subsidy, establish where the money is going to come from, and take it out of the taxpayer's pocket. Because we've got many, many more people employed supplying services into those mines than we have polishing diamonds after the fact. So the policymaker has to balance that, and as a consequence, the state diamond trader has had to operate under very tight parameters. And quite frankly, I have some sympathy for the people involved in trying to balance that. It is not easy. They are required to fund their own costs out of the profits they make trading diamonds. They are funded with a revolving credit facility from the Industrial Development Corporation. That's not an easy role to play, even though they have the first pick of 10% of run-of-mine diamonds.